Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Justin Huhn. He's the founder and publisher of Uranium Insider, an independent energy research boutique providing strategic market insights on clean energy, uranium, and more. Justin, it's great to have you with us. Welcome to Trade Talks.
It's a pleasure to be here. Thanks for having me, Jill.
You got it. And looking ahead to 2023, can you give us a sense if we'll see a strong commodities bounce back this quarter and perhaps for the remainder of the year?
Yeah, well, 2022 showed, commodities really outperformed pretty much every other sector for the year. We had the XLE fund up almost 50% on the year. Most investors, even with a cursory understanding of commodities and metals, understand that the last decade has seen dramatic underinvestment in pretty much every commodity across the board. This, of course, has manifested in production constraints and sort of the classic commodity cyclicality, where low prices are the cure for low prices. A long enough time period passes, underinvestment passes, the price starts to rise. We're kind of in the early stages of that recovery, that reversion to the mean.
Taking a closer look at trends, what specific areas are attracting investor interest? In other words, where are the opportunities in the space?
I think there's multiple opportunities across the commodity space. I think obviously the commodity that steals the show is kind of oil and gas sector. I think that still has a long ways to go in the coming years due to this underinvestment I just mentioned. Of course, we focus on the nuclear energy sector and uranium, and I think it's a really big opportunity here because of that underinvestment of the previous decade. Following the Fukushima Daiichi disaster in 2011, Japan shut off all the reactors. The price tanked, bottomed in 2016. Since there, it's made a decent recovery, but we're still probably in the first couple of innings of a multi-year contracting cycle for the nuclear utilities. So whether it's from ESG pressures, from low carbon energy pressures, climate goals, the current energy crisis that multiple countries are facing. There's presently a renaissance happening for nuclear energy because of these factors. And the cost of fuel for the nuclear reactors is negligible when it comes to the overall operational costs. So the commodity can rise significantly higher than it is here, which we expect it to, without negatively impacting the nuclear utilities.
So what's on the horizon for energy as we kick off the new year? What else should investors be thinking about in terms of what's next for nuclear and uranium, notable players or strategy?
Sure. Well, I think 2022 really the big lesson that was learned by multiple world leaders is essentially that there's no national security without energy security. One fine point on this that's on the world stage currently and has been over the past 6 months, especially, is Germany. Germany famously has shut down all of their reactors with an exception of 3 that are set to shut down in the next few months. They phased out nuclear. They went all in on renewables to the tune of $500 billion in their Energiewende program. That has basically resulted in, next to Poland, the highest carbon emissions in all of Europe, and a very unstable energy grid that they've had to go invest another $500 billion, hard to believe, in the last year to basically buy every energy molecule they possibly could. And a lot of that has come from biomass, trees being cut in the United States and shipped across the sea, coal, lignite coal, the dirtiest coal. So that has been an abject failure, and all the world is watching that right now. That's a big lesson learned. So on the horizon, I think we're going to see more of what we're already starting to see, which is countries doing a 180 on nuclear.
This week's headlines included news about an agreement between Japan and the US to develop next-gen nuclear reactors. Is there a renewed interest in nuclear globally? Do you foresee this as a long-term investment versus just a trend?
Definitely. There's a couple of short-term catalysts potentially, which primarily have to do with the potential for the financialization of the sector. If we see risk on and money flowing into the ETFs, and in particular into the Sprott Physical Uranium Trust, that essentially raises money on an ATM when they're at a premium to NAV to buy physical pounds, and that tends to move the whole sector when that happens. So that's always this looming potential for a short-term move in the commodity. Long-term, I think we're going to see a very long-term trend in a move back to nuclear by countries that have either slowed down their building out of nuclear or have completely abandoned it. So France has done a 180 from a phase-out policy to planning on new builds. The UK has done the same. Sweden and South Korea have both announced in the last week that they are going to reduce their push into renewables and increase their push into nuclear. Saudi Arabia, the king of oil, is actually going into nuclear. Japan, as you mentioned, is probably the most notable. Why? They are the country that has experienced the most recent nuclear accident in everybody's minds. That was the Fukushima Daiichi in 2011. They also are the only country that has ever experienced, the fallout from a nuclear warhead. And so Japan, now public polls are showing the country is majority in favor of nuclear. They have restarted 10 reactors of 33 that are still currently operable. They're shooting for 20 to 22% nuclear by 2030. That's an additional 20 restarts in the country of Japan in the next 7 years, which is not only big for reduced supply, but also big in demand if they start buying again.
Yeah, Justin, that really is quite remarkable considering Japan's recent history and, of course, its broader history overall. To your point earlier, oil, gas, they're the ones that get the attention in the commodity space. So for our audience here, Justin, is there anything our viewers should know or consider when thinking about nuclear and uranium investing that we should be aware of?
Definitely. It's notoriously volatile. So we always recommend that investors make a rational allocation to the sector. The stocks tend to punch above their weight. So you don't have to have a massive allocation to the sector to see pretty substantial returns when the sector does run. It's a very small sector. It's only about 35 billion in total market capitalization. So when funds do flow into it steadily, it moves pretty violently in both directions. But when funds are flowing in, obviously to the upside, we highly recommend against using leverage, establishing positions in multiple tranches, because the moves tend to come unexpectedly and don't necessarily fall perfectly in line with the news flow. So a lot of times investors will be frustrated with the lack of movement in the sector due to positive news flow, and then all of a sudden it goes. So entering in tranches is usually typically a good strategy. And then, of course, for our newsletter members, we have a process for choosing these stocks, and we always like to diversify across jurisdictions. We always look at the management, the share structure, et cetera, but we like real companies that can and are and possibly will be producing something physical, producing actual cash flow that you can actually model out future cash flow. And there's only a handful of options in the space for that. So real companies, rational allocation, no leverage.
Yeah, truly appreciate that, Justin, particularly your point around leverage. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.